Welcome everyone to another video on accounting. Today we are discussing the accounting methods. Now there are two types of accounting methods, the cash accounting method and the accrual accounting method. They are also known as the cash basis of accounting and accrual basis of accounting. In cash accounting, we record transaction when cash is paid or received. However, in accrual accounting, we record transactions when they occur regardless of when cash is paid or received. The important thing in cash accounting is to look at whether cash is received or not. If this does not happen, a transaction is not recorded. Say a business makes a sales and receives the cash on the spot for the sale. So the business will record that sales in accounting record. However, if it does not receive the cash for that sale on that day, it will not record that sale. Rather, it will wait until it receives the money. Say it could be another week, and that's when the sale will be recorded. Accrual accounting, this is not the case. Accrual accounting does not look at when cash is received or paid, rather it looks at when a transaction occurs. So when does a transaction occur? An expense transaction are incurred or they occur and are recorded when a business uses things or services provided by others. If cash is paid or not, we don't look at that. So the moment a business uses things, for example, uses supplies, the business has incurred an expense and therefore it should record that. Or if a business uses the services provided by others, say employees, now the business has used other people's services. It has to record that transaction as an expense if cash is paid or not. Similarly, for a sales, a transaction occurs and recorded in the period in which the sales happens. If cash is received for it or not. The moment a sales occurs, the transaction of sale must be recorded as revenue. Now, generally, a sales transaction happens when the goods are delivered to the customer or when services are provided to the customers. The moment that happens, revenue is recorded in the period in which this happens. Now, these differences give rise to two important things that is a big difference between cash accounting and accrual accounting. Since cash accounting only records transactions when cash is received or paid, we will have no liabilities here. And similarly, there will be no receivables. So a sales that has happened and cash is received, recorded. If a sale that happened but cash is not received, the business waits until the cash is received. So the business will not record a receivable. Similarly, a business will not record an expense if the cash is not paid for it. So there is no concept of payables in cash accounting. But accrual accounting, there is a concept of payables and receivables. So when we use the services of employees, we have incurred an expense. If we paid it them on the spot, good. But if we don't pay them on the spot or pay them later, we will have a payables. Similarly, when we make a sales and receive cash for it, okay, a sale has happened, and when we record a cash for it, get a cash for it, so that is also recorded. However, if we don't get cash for it, or rather get it in the future, this will give us a receivables. So we have payables and receivables in accrual accounting. To give you another example to fully understand this, um, here is an example for Buddy Painting. Buddy Painting bought $500 of paint supplies for cash in January. During January, it painted two houses for $5,400 but will receive the payment in February. So, under cash accounting, Buddy will not record any revenue, any sale in January because it did not receive the cash for that. However, it paid for the paint supplies in January, so it will record that as an expense. And in February, Buddy Painting will receive the cash for the sale, and that's when Buddy will record it as revenue. This is not the case in accrual accounting. So in accrual accounting, Buddy will record revenue of 5,400 in January because that's when the services were provided to customers. And since supplies were used, those supplies will also be recorded as an expense. In February, however, nothing will appear because there is no service provided or no usage of any supplies. So this was the difference between cash accounting and accrual accounting. So hopefully you understood and the video was helpful. Make sure you watch our other videos on the channel and make sure that you like, subscribe, and click the notification icon for more information. See you in the next video.